What if I told you the founder of one of India's biggest startups borrowed over $2 billion just to take back control of his company? And what if I told you that even with that risk, OYO's IPO, the moment that should have made him a billionaire, has now been delayed 3 times? And the clock is running out because if OYO doesn't go public soon, Ritesh Agarwal might owe hundreds of millions personally. At 19, Ritesh Agarwal wasn't supposed to do this. He was a dropout, a dreamer, sleeping in budget hotels across India. Not because he had to, but because he was studying them. What worked, what didn't, what could be standardized. By 21, he wasn't just building a startups, he was raising millions. SoftBank came in, Sequoia joined. By 2019, OYO was a beast operating in 80 countries across the world with over 1 million rooms under management. Essentially, it was the largest hotel chain in the world. And Ritesh, he was the golden boy. But here's where the story takes a twist. In mid 2019, something absolutely audacious happened. Ritesh Agarwal, at just 25, announced he was going to buy back $1.5 billion worth of shares in OYO from early investors like Sequoia and Lightspeed. Why? Because he wanted to consolidate his control over OYO and probably because those early investors wanted an exit. So before the IPO, but here's where the story gets wild. He wasn't using profits, he wasn't using VC money, he was taking out a loan. Imagine, to buy out $1.5 billion worth of equity, he had to take out a $2.2 billion loan. Now, to make that happen, Ritesh set up a Cayman Islands entity called RA Hospitality Holdings. This shell company was owned 100% by Ritesh. Now, the lenders, including Japanese banks like Mizuho and Nomura, were understandably skeptical. Ritesh was just 25, and $2.2 billion is a lot of money, despite all the earlier VC funding which OYO got. He didn't have assets to collateralize, and OYO was a cash-burning rocket ship, not a profit generator. So, how did the deal essentially get approved? Now here's the kicker. SoftBank, OYO's biggest backer, stepped in personally to guarantee the loan. Yes, Masayoshi Son himself, through SoftBank Vision Fund, underwrote the risk. That's how deep their conviction was in OYO. That's how much faith they had in Ritesh. Naturally, there would have been some deal as well, where they would have some equity within OYO as well to kind of pledge that as an asset to get this loan. But despite that, it was still a significant amount of risk. But it also means that now Ritesh's fortune is tied directly to OYO's IPO timeline. Here are some financial facts. RA Hospitality Holdings, which is an entity in Cayman, was created solely for this debt deal. $2.2 billion, which was funded through the debt financing from Mizuho, Nomura, and a few other Japanese banks. SoftBank guarantee. SoftBank pledged its Vision Fund stake in OYO to guarantee repayment. Ritesh's equity boost. His stake increased from 10% to nearly 30% post buyback. Now, why the urgency? The 2025 IPO deadline aligns with the loan repayment. If the IPO doesn't happen, Ritesh may be forced to sell equity again or refinance under worse terms. The repayment terms are brutal. The first $383 million of the loan was due by the end of 2025. If OYO could not IPO before that, Ritesh would be personally liable to pay, not from the company funds, from his own personal pocket. Now ask yourself this: would you have the guts to raise such a huge debt? Even if you had such a huge guarantor behind you like SoftBank and Masayoshi Son, would you be able to sleep at night with such a huge loan which you are personally liable for? Risky bets and tough decisions like these are what's required to operate at the highest levels of business. And then 2020 hit. COVID-19 stopped the world, and OYO, a company built on travel, came crashing down. Naturally, revenues nosedived. Hotels had to shut down their operations. OYO had to fire thousands, cut salaries by 25%, of the employees which it retained, exit their co-working and co-living ventures. And now Ritesh, he still had that $2 billion loan which he had to repay from in his personal capacity. Lenders started calling. His empire was bleeding, and the IPO was the only way out left, which had to be delayed because of the bad market conditions. OYO tried to go public 3 times. For most founders, it's a milestone. But for Ritesh Agarwal, it was essentially the lifeline of his business, because if he does not IPO, he would not be able to repay the massive debt which he had taken. He needed it to go live, to prove that OYO had finally made it, and now he can finally repay the loan that he has. To win back the narrative that OYO is not just a cheap hotel company for couples, but a real full-fledged hospitality brand and one of the largest in the world. But the IPO didn't just get delayed once, it was delayed 3 times. The first attempt in 2021, Ritesh filed OYO's DRHP in 2021 with SEBI, aiming to raise 8,430 crores, roughly $1.2 billion at a $12 billion valuation. But investors balked at that valuation. OYO's losses were still extremely heavy. In FY21, OYO posted a 3,943 crore loss. Even with recoveries showing up, its unit economics were in the red. They pivoted from one night stays to longer monthly, bi-monthly and multiple month stays, and that pivot helped them to survive a little and survive the COVID crisis. But that was still not enough. And by the time the responses came in, the markets were tanking. The Omicron variant re-triggered global panic, and because of that, the IPO had to be scrapped. Attempt number 2 in 2023. By 2023, OYO had cleaned up its act. Losses were trimmed. In FY22, they brought it down to 1939 crores. And the narrative shift. OYO is turning leaner, stronger, and becoming a more proper business. Ritesh refiled a revised DRHP. They even cut the IPO size down to 5,500 crores, which is $660 million, to reflect a more sober market. But here's where the real twist happened. SoftBank, the same giant that guaranteed Ritesh's loan earlier, became the true villain of the moment. SoftBank had taken huge write-downs across its startup portfolio by 2023, most notable ones being WeWork, Ola, and a few others. They wanted a higher IPO valuation to protect their returns. Now Ritesh was okay with a down round listing even at around $6 to $7 billion because he desperately had to repay back the loan. But SoftBank vetoed the idea. They did not want to look weak, and Ritesh didn't have the time to look strong. Behind closed doors, there were a lot of boardroom clashes, but SoftBank had veto power because they had 40% equity holding in the company. So they blocked the listing. Now attempt number 3 in 2025, which happened most recently. This was supposed to be the final moment. OYO's business had improved even further. OYO's claimed adjusted EBITDA profitability. Global presence scaled back, focus returned to its core India and Southeast Asia operations. Costs were under control, headcount was lean. Ritesh even infused personal capital gain, over $200 million cumulatively through 2022 to 2024 to stabilize the cash flows and show commitment towards the business. The man had complete skin and blood in the game. But then came the killer blow. SoftBank refused to support the listing time, this time again. They feared another down round IPO, which was a significant reputational loss for them. They were also under pressure from their own LPs, and they held board veto power. Without their nod, the IPO could not proceed. Imagine betting your life on a move, and the people who bet on you, they start betting against you. That is exactly what happened right now. So now here's the cost. If OYO doesn't list by the end of 2025, the huge bill of the loan is going to come calling. Ritesh has to repay $383 million from that loan, and that repayment is not optional because the loan has already been restructured during the COVID crisis. So now there is no more scope for restructuring. With banks, the contracts, and the interest taking, he could be personally liable to sell equity at distressed prices, or worse, face default risks. This isn't a founder story anymore, it's a redemption arc, but only if the ending changes. Now imagine being in Ritesh's shoes right now. You've built one of India's most iconic startups. You've survived a global shutdown which was designed to kill the hotel businesses completely. You've pumped in hundreds of crores of your own money, but your IPO is now caught between the investor's own priorities, market pressure, a $1 billion clock ticking louder with each and every month, and your own personal priorities. This isn't just any random startup story. This is the reality of VC funding, private equity funding, and when you truly take the game at the global level. It's a personal bet, a high wire act. And if OYO doesn't go public soon, it's not just a missed opportunity. It could potentially cost Ritesh everything. Imagine all the effort, all the time that you put over the last decade to build this business, and you've taken such a huge personal guarantee loan, and all coming down to one single decision which could take you back so much. So, what do you think? Should Ritesh have taken that $2 billion loan? Was SoftBank protecting the company or playing puppet master? Let me know in the comments below. And if you enjoyed this deep dive, hit that subscribe button and share this video with a founder friend who might need more inspiration or motivation to build their startup further. Because behind every unicorn, there's a story of risk, control, and consequences. Subscribe for more untold stories and see you in the next one.